Hello everyone, welcome to Just Invest Today, and today we're talking about Alibaba's just recent earnings report that just came out for Q2, man. And look what just happened. Alibaba has crashed huge, down 10%, man. Woo! What a time to be alive to be an Alibaba shareholder, man, and we're getting crushed. But we have to talk about it in this video. We got to get really into it because I always expect, like, I just came out with a video expecting it to hit 200 from the China news with freaking Joe Biden, and I thought they were going to be actually be doing better on the earnings report. But even though they didn't do as I expected, it still was a good earnings. It wasn't bad. It wasn't like too good. It was just mediocre. But they're killing Alibaba for that. They're just smashing it. So we got to get into it first. So let's see what Alibaba did, right? Let's see kind of what the metrics are for Alibaba and what it missed, what it hit. So we're going to get into that really first. But before we get into that, guys, can you please like this video? Subscribe to my channel, man. I'm trying to get to 1,000 subscribers. Help me out. So let's get into it. So Alibaba just came out with this earnings report. The guidance was soft for Alibaba. This was the big thing. So we know how Alibaba has been growing like 29%, like 30% around there. And what Alibaba said, they came out and said that we're not expecting the same amount of revenue growth going forward or in the next like probably year or 2 years. So they're expecting now, instead of 28 to like 30%, they're expecting 20 to like 24, 25-ish percent, which is still amazing. But that's what happened, and that's the soft guidance after the EPS miss and the revenue miss. But guys, look what happened. The revenue miss was 29% year over year revenue miss. So is that really a miss? Like, that's the thing with earnings and earnings dates. Like, people have high expectations. I had high expectations. And even what Alibaba said had high expectations. But we have to understand the environment right now. You can't predict the macroeconomic environment. We know that the e-commerce market, China, the growth is slowing down for just the overall market. And guess what? Alibaba is like 50% of the e-commerce market generation there. It has that dominant of a position. So if the overall Chinese market is slowing down, Alibaba is going to slow down. And is 29% really slowing down in your eyes? Like, just understand that, like, yes, the earnings is going down, but we have to understand why the earnings is going down and what happened with the free cash flow going down a little bit. So we have to look at the different articles too. Look what this person wrote about Alibaba. Alibaba misses expectations as earnings plunged 38% in September quarter. If you just read this headline, you would be running for the hills. Like, this gives you no background. Like, this headline is getting you to just throw out all your Alibaba shares. Like, this is what they want you to do. Look at this headline. Like, what else can this headline be like questioning? They didn't look into what's happening. So Alibaba has been a victim of China's crackdown on the domestic technology industry, which has seen a slew of new regulations brought in from antitrust to data protection. Expectations were low coming into the fiscal second quarter earnings report. As a result, analysts expected it to be one of the most challenging quarters ever for the e-commerce giant. So yes, okay, EPS did decline 30%, right? But it's still on the high end. That's what they're not getting. And why it declined, guys? It's like an Amazon thing. They are investing in so many different companies. Like, their investment process is crazy overseas. They have Lazada, they have an investment in Turkey, they have a grocery delivery, like they have like a networks, Canoe. Like, they just have a variety of investments they're making, and they're seeing that those investments are paying off into the future. But before we get into that, how their investments paying off in the future and how much they're growing, let's continue on and see what the market is doing. So I want to give you a perfect example of what's happening. Look what happened with Amazon. Boom, boom. This is why you can't rely on the market and what the market tells you. Amazon EPS miss. Look at this. Look at that. They missed by $2, basically $3, guys. Guidance Q4 guidance disappoints. Misses on EPS, misses on revenue. Revenue only grew 15%. Look at what the opposite end. Baba grew 29%. And just understand the difference of the sentiment going on in the market. Amazon barely, they missed basically. They barely passed revenue guidance, missing on revenue, missing on EPS. Nothing happens with Amazon stock. Nothing happens. It just goes up. Look at that, 7%. It still goes. It goes down 2% pre-market, goes up whatever, 8%, 9%. Like a week after, no one cries. No one mentions it. It just blows over, and that's the difference between Amazon and Baba. Baba is all sentiment. Amazon is just the American hero, a strong company, can't do no wrong. So I'm just giving you both perspectives on what's happening in the market and how you just can't look at the price of the shares of what Alibaba is giving you because it's not accurate basically. Like the fundamental truth is that you have to look at the business for what the business is doing, not what everyone else is saying, not what everyone else is doing. Because if you just look at the market and seeing the price of Alibaba just crashing, you're gonna be like, hell no, I'm investing in this company. It's crashing. The sentiment for Alibaba is bad, but look what happened with Amazon. Amazon did worse, way worse than Baba, and they're just fine. Everything's smooth. Everything's just going just straight and narrow. But with Alibaba, it's a crash. It's the worst thing ever. So let's look at the results and what Alibaba is really doing with the money. So look at this. Alibaba Q2 revenue up 29%. Invest in the future. International commerce and cloud computing see surges in revenue. And that's what we got to look at. We got to look at the big picture on what they're doing, what the future is looking like for Alibaba, for Lazada, the community marketplaces, Taobao deals, all these future winners that have a lot of potential, right? So the Alibaba's annual active consumers expanded to about 1.224 billion for the 12 months ended September 30th, adding roughly 62 million from the 12 months ended June 30th. We are on track to achieve our long-term target of serving 2 billion consumers globally, said Daniels, right? So they're still on their way to serving a large percentage of the population, and that's gonna go with the Chinese economy. As the Chinese economy gets better, that's gonna grow with it. But yes, which reflects the underlying performance. It dropped 32%, so the headline was right. But seed investments in businesses such as bargain app, Taobao deals, local consumer services, community marketplaces, and the Singapore headquartered e-commerce platform Lazada. That's the investments. Excluding these investments from profits from commerce would have been stable year over year. So it would have been stable, but they're doing the reinvestment game similar like what Amazon did at the beginning, how they kept taking their profits, reinvesting in the business internally, and just fueling that growth, man. So that's what Alibaba is doing. Like the steady growth is still there. So don't get stuff twisted. Got to look into what's happening. Lazada revenue dropped 82%. 82%. That's what's happening with these businesses. Their logistics services grew 20%. International commerce, 34%. Cloud computing revenue, 33%. Year over year. We are on track to achieve our long-term target of serving 2 billion consumers globally. So, guys, they're investing heavily into just putting money back into business, growing the company internally, and they're just feeding the international e-commerce like AliExpress, and all these companies overseas in Turkey and Southeast Asia and all these places. So you have to look at this earnings with a grain of salt. You got to kind of go in depth and look what the business is doing, not just what the freaking market is telling you Alibaba is worth. Just look at what the actual economics of the business is doing. So that's my quick update for the earnings report. We're going to get into the earnings call too. We're gonna do more, but for this video, I'm gonna leave it at that. Guys, please like this video, subscribe to my channel, and I'll get back to you in the next video. Peace!